Hey folks, welcome to Quantsapp, welcome back to yet another video. In today's video, we will learn about event trading. So whenever a stock announces its result, whenever there is union budget, whenever there is fiscal policy announcement, then RBI credit policy announcement, right? The repo rate change thing. Now, these days you will not see a major implied volatility change or major change in the market in case of RBI policy announcement, but yeah, the other aspects, the results, the union budget, they will affect the stock and they will affect the market significantly. So in today's session we will learn just that, how can we go ahead and trade events in the market. So one of the most predictable events, or I would say one of the most simplest events to trade, is the results, because you know which stock is going to announce results when. So if you want result calendar, just navigate to result calendar from the search panel and you will get to see on what day what FNO instrument is announcing its result. Okay, now how does this help me if I'm trading in options? So the best part about options is that I don't need to predict the movement of the underlying always. Okay, so I just don't need to keep on predicting where the market will go up or market will go down. I don't need to predict it 100% of the time, but I can use the other information, the other variables, something like implied volatility, which we will do in some time, to go ahead and trade in options. Okay, now 25th of October, there are 3 stocks which are announcing their results: Tech Mahindra, Indus Tower and Axis Bank. Okay, now if someone asks me, okay, Shubhankar, what is your view on these 3 stocks? So I'll say that I am very uncertain. I don't know. The stock is going to announce its result on 25th of October. We'll see on 25th of October if the results pan out to be good than the estimates. Then I'll see that the good results, they they impact the stock's price accordingly. You will see preferably the stock price moving up and the vice versa. But till 25th of October, I don't have any view on these 3 stocks, but I have one view, that I am very uncertain. I am very curious that what will happen in the instrument, right? Whether the instrument will go up or whether the instrument will go down. So just like me, other option traders too, they will be very uncertain about these stocks. Okay, and you will see that the uncertainty, it will keep on increasing as we head towards the result day. So now, due to which the implied volatility also increases. So what is implied volatility? You would have heard me saying in a lot of videos, implied volatility is nothing but uncertainty. How much volatility traders are expecting to play out in the future is shown to us by implied volatility. So on this day, so on 19th of October, the implied volatility is high because the traders are expecting a lot of uncertainty. That is the first thing. Second thing is the demand of the options is very high in the market. Why? Because people might use options to hedge it. People might, some people might create long straddles to actually, benefit from a big move that may happen because of the event, because of the results in this case. So what we need to do before any major event, we will prefer buying options. Okay, if I don't have any view, I will prefer buying a call and put option both. Okay, why will I do that? Because if implied volatility in the market goes up, we have all learned it, that whenever implied volatility goes up, regardless everything in the market, if it remains the same, the call and put premiums go up. And whenever the implied volatility goes down, we have all learned it, that call and put premiums both go down. So my strategy is simple: before any major event, I will prefer buying options, and before any major event, I will prefer option selling strategies. Now after the major event, or after the results are announced, I will stay away from strategies like short straddles and short strangles. Okay, I will prefer strategies such as iron condors, iron flies, butterflies, which are more or less the hedge strategies, so that I don't face an undefined loss because of a big move which may play out in the stock. So now let's just understand this entire concept by looking at the IV chart. Does this really happen? So let me just take you to IV chart. So you can access Quantsapp from the link in the description box below. Now the orange line is showing us implied volatility and the green line is showing us the futures price. Now what you can see out here is, see the dots, they are representing result, that on this day this stock announced its result. So the stock is Reliance. What you can see, it is moving up, the implied volatility. So in this entire regime, it didn't actually matter if you had call or put. Both the premiums got pricey, both the premiums got expensive. On this zone, if you just see what has happened, implied volatility started to crush, it started to collapse, and it collapsed like anything, and eventually option writers would have made money in this entire zone. Why? Because someone who sold IV at 27.25, he later on bought at 15.78. So a decent down move on implied volatility, what option writers would have captured in this entire zone. So the funda is simple, the mantra is simple, that before any before the uncertainty becomes known, we will see that the implied volatility goes up, and the moment uncertainty becomes known, after that the implied volatility will collapse. Okay, so till the time the uncertainty is unknown, you will see the spike in implied volatility, and the moment uncertainty becomes known, the implied volatility would collapse. So same is the case with Nifty, BankNifty, but we will have to wait for a major event to play out in the market, more or less something like Union Budget. So let me just show you that. So February, so on 2nd of Feb, right, or 1st or 2nd of Feb, there was Union Budget announced. So what we can see before that is a huge spike in implied volatility, all because of budget. Okay, all because of budget. So even here the Nifty's options, they would have got expensive. Why they would have got expensive? Obviously the same thing that we learned, everybody was uncertain about the budget. So that is how we can go ahead and trade events in a much more simpler way. So simple, actionable. Before any major event, I will prefer buying options. If I'm bullish, I'll buy a call. If I'm bearish, I will buy a put. That is the first thing. Before any major event, I'll prefer buying options. Second thing is, if I don't have any view, then what should I do? I will prefer doing strategies like long straddle, buying at the money, call and put, and holding it for 2 to 3 days maximum. Okay, not more than that. The reason is the theta might kill the entire premium that we have earned. So just be sure that whenever we are doing long straddles, then buying naked options, at that time the theta should not kill me. So that is the reason I will maintain 2 or 3 days of time stop loss, and I can cruise that trade. That's number one. Number two is, how can I trade after the event? So after the events, the trading is very simple. I will create strategies such as iron flies, wherein I am selling ATM call and put, and buying wings, so that I am not facing an undefined loss over there. So that is the IV trading related aspect. Now one more thing that we can do is the result analysis. Okay, so what it is trying to show us is how a stock behaved n number of days after the results and n number of days before the results. How it behaved, so let's say result day is this day, how it behaved 2 days before the result, how it behaved 2 days after the result. So result day is the comparison point, how it behaved before and after. So now what I want to achieve from here is, so you see something like Reliance. So now one thing that you will notice is, so let me just show you what happens generally 4 days after the results. One thing that you will see is that in most of the scenarios around result, 2 days before the results and 4 days after the results, if you see, Reliance has been under control of bears. See, down by 5%, 9%, okay, 2%, 4%, marginally positive. So I would say it was just once, that was also 21st of October 2022. So it announced its result on 21st of October 2022. Only that time, 4 days after the results, it was positive. Rest, if you see all the times historically, it was negative. So we can form a bias on any particular instrument which is going to announce its result using the result analysis. So yes folks, so we learned about the implied volatility, how can we use implied volatility in our trading around the events, and also we learned about how can we go ahead and form a bias on any particular stock if it is announcing its results. So that was it from my side for this video. Stay tuned for more such videos.